In this video, we're going to talk about Intuitive Machines and why it was down. Once again, to be specific, it was down 18%, and this is while the broader markets were down only 2.5%. You can see on the monthly chart, since hitting the highs at about $25, the stock is now down roughly 70%. So, question is there further declines, or is price going to rebound at current levels? Before we get into the analysis, let's look at the news. So the Houston-based lunar technology company saw a second mission failed of a lunar landing. Intuitive Machines had launched its Athena spacecraft in conjunction with SpaceX, successfully reaching the lunar surface. However, the lander tripped on its side and died soon after. Athena lost power after being unable to face its solar panels towards the sun. The spacecraft also went off course, touching down roughly 150 miles from its target. Now, Athena was carrying payload for NASA and commercial customers, including 3 rovers, a rocket-powered drone, and a drill meant to search for water ice in the lunar soil. Now, this makes the second lunar lander for Intuitive Machines that has tipped over on the surface after its first spacecraft, Odyssey, suffered the same fate last year. Despite the consecutive failures, the CEO remained upbeat, saying anytime that you ship a spacecraft to Florida for flight and end up a week later operating on the moon, he declares it a success. Now, of the 4 missions NASA has green-lighted for a commercial contractor to land on the moon, only one has been a success. It is relatively early days for the program, and Intuitive was still able to touch down twice, even if the missions were ultimately unsuccessful. Alright, so those are the reasons for the crashes. And if you look on the weekly chart, you see 2 extended range red candles, meaning if price was to rebound, price should have an easy way to get back to at least the $20 level. That's where you do have multiple rejection wicks. Now, one thing we got to note, this wick over wick, that's roughly at the $14 level. We'll see if there is any resistance at that level. One can say you did have some resistance in the past at that $13 level back in February, and so potentially that becomes a first target, with the $20 becoming a second target. Now let's zoom in on where price is at, because it's within a monthly buy level. Zooming down to the daily chart, price is below the 200-day moving average. Anything below it, you're typically in a secular bear market. You can see some of your moving averages are pointing down sharply. That just kind of tells you that the momentum to the downside was pretty tremendous in recent weeks. Now let's examine the price action in this range bound price action over the last week. Drastic move down. Now we have some basing. Why? Well, potentially the smart money is loading up before prices resume or rebound from current levels. Now, I did say that $14 will become a first target. Really, you want to see price eclipse the $10 level. That's where that 200-day moving average serves, and it will serve as dynamic resistance. Now, let's open up the price action here. So right now, let's look at the candle in control. That would be this green candle. You highlight the high and the low. And typically what happens is that, let's definitely make it orange. Actually, we're going to make it aqua. Typically, anything inside, you anticipate price being range bound. But if you start getting candle closes above or below, that's going to be, in most cases, the direction of the trend. So being that we are in a monthly buy level, the charts are suggesting look for a rebound Again, look for a short-term target at $10, a medium-term target at $14, and a longer-term target at $20. Thanks for watching. Subscribe. Please like the video.